Hello, and welcome to BizRun. This video is the fifth video in a series called Leave and Time Off Management, where we will give you an in-depth view of the module and instruction of its use in BizRun. We encourage you to watch all the videos in order, then go back to rewatch and use as reference the videos that apply to your organization. In the last couple of videos, we introduced you to time off accruals. We talked about what they are, how they are used and applied to time off types, and we also took a closer look at the rate as well as the hours earned per hour worked accrual types. We also demonstrated and talked about some helpful information provided when running balance reports. Information that can help you and your people make important decisions and manage your leave and time off in BizRun. In this particular video, we're going to focus on the time off accrual type called balance. For starters, we want to make a distinction between a calculated balance, typically presented in a balance report, and a balance accrual entry in a person's personal info time off accrual tab. While they are both related to leave and time off, they are two different things. The first is a result or calculated value on a date you specify and can change from day to day, while the other is a setting that is entered and will be used to calculate day-end balance values from a specified date. One way to think about and use the accrual type balance is a starting point. Consider the analogy of driving your car. Let's say you jumped into your car, and before you started driving, you took note the number displayed on your dash trip odometer. After driving and arriving at your destination, which was 5 miles away, you took note again, the number displayed on your trip odometer. It was 5 more than what it read before you started driving. Whether the trip odometer initially read 0 or 2,254, it was your trip's odometer's starting point for your 5-mile trip. The balance accrual type entry is the starting point on a day, which is the effective date, that the time off hours are either going to be added to, or in some cases subtracted from. By adding a time off accrual entry in BizRun with the balance accrual type of 0, it would essentially reset the trip odometer, or in this case, the person's start of day balance. By adding a time off accrual entry in BizRun with the balance accrual type of, let's say, 60, it would start the person's start of day balance at 60 hours, just like the trip odometer in our analogy starting at 2,254. Having a starting point or starting balance is a good idea, especially when using the rate or hours earned per hour worked accrual types. It'll ensure correct and accurate calculated balances when balance reports are run. If you recall from our last video, both characters, Nancy and Sean, had 0 balance entries on January 1st, 2021. These were their starting points for the hours earned per hour worked entries to function properly. They both started with nothing or 0-hour balances for 2021. During the implementation of the BizRun HR system for your organization, our support team typically enters the starting balance for a specific date for all your people before they are able to use the Leave and Time Off Management module. Let's go through a couple examples to help you get a better understanding of how balance accrual types work in BizRun, and what better way to visualize it than taking a look at a spreadsheet. This spreadsheet is simplified in comparison to the ones in our previous videos. The first row in this sheet still shows column headings for some specific days, but for the sake of simplifying, it also shows spans of time that can be considered the remaining days in that year. The second row represents entries for balance accrual types on specific days. The next row in this case represents when and how many hours the person takes time off. And finally, the last row shows the calculated balance at the end of the day. So, Daniel had a balance entry of 60 hours effective January 1st, 2021. At the end of the day, since he didn't take any time off, his calculated balance was also 60 hours. His balance was the same at the end of the following day, January 2nd. Let's fast forward a little in time and say he took 20 hours of time off before the end of 2021. If you take the 60 hours balance and subtract the 20 hours, his calculated balance, or remaining hours, at the end of the year is 40 hours, which is what's shown on the last row. Now, this is an important use of the balance accrual type, so please note, on January 1st, 2022, Daniel has a balance entry of 60 hours. If you notice his day-end balance of 60 hours, you might ask yourself, shouldn't this day-end balance be 60 plus 40 or 100 hours? The answer is no. The balance entry of 60 hours resets, restarts, or better yet, overwrites his previous day's calculated balance of 40 hours. 60 hours is Daniel's new starting point at the start of the day on January 1st, 2022. If he doesn't take any time off that day, his day-end balance would still be 60 hours. Let's keep moving forward. On January 3rd, 2022, let's say he takes 5 hours of time off. Since there are no other balance entries for that day, the 5 hours are subtracted from his previous day's balance of 60, and the resulting end balance for the third is 55 hours. Let's fast forward again in time and say he takes 40 hours of time off before the end of 2022. If you take the 55-hour balance and subtract the 40 hours, his calculated balance, or remaining hours at the end of 2022, would be 15 hours, which is what's shown on the last row. Finally, on January 1st, 2023, Daniel has another balance entry of 60 hours. Just like the year prior, if he doesn't take any time off that day, his day-end balance would be 60 hours. Again, the balance entry of 60 hours overwrites the previous day's calculated balance of 15 hours. Now that you've had the chance to see how BizRun uses the balance accrual type behind the scenes, let's go back into BizRun and run a few time off balance reports to see the information it will give you. Let's run the report as an administrator through the Reports main menu. The time off data, as well as the accrual data that we saw in the spreadsheet, has already been input into Daniel's profile. So when we run the report for January 1st, 2021, we see his day-end balance as 60 hours. If we run the report after December 31st, 2021, after he had time off hours totaling 20 hours for the year, his day-end balance would be 40. On the next day, if you recall, he has a 60-hour balance entry. So his day-end balance for January 1st, 2022 is 60 hours. Again, his new starting point for that day. On January 3rd, 2022, if he takes the 5 hours of time off, his day-end balance would be 55 hours. Running the report for the end of the year 2022, after Daniel takes an additional 40 hours of time off, his day-end balance on December 31st would be 15. And finally, another 60-hour balance entry on January 1st, 2023 would give him a day-end balance of 60 hours, assuming he doesn't take any time off that day. Some of this might seem complicated, but the good news is that BizRun can do all these calculations for you. And that's taking a deeper look into balance, the accrual type, in BizRun. Be sure to check out our next video in the Leave and Time Off Management instructional series, where we will discuss the other time off accrual type called adjustment, and build on what we've learned so far by showing you how these accrual types can be combined to suit your organization's leave and time off policy and needs. Hope this helps. Thank you for watching.